Hi, I'm Dan Evelyn, mortgage loan officer since 2001. In that time, every few years we see some big interest rate drops, and right now we're in the middle of that next opportunity. We're seeing some 18-month lows in mortgage interest rates, and today I just wanted to show some evidence of that. And you've probably seen some things in the news regarding the 10-year treasuries and mortgage-backed securities markets have been red hot. And I've got some illustrations here as to showing you some evidence of that. This is the last 3 months. So the mortgage-backed securities markets, we want to see kind of on that slow increase. And we peaked here in March where we saw the beginning of some refinancing, but really we've continued to improve on that. And just even in the last week, we've really hit our lows, and looks like we'll probably stay there based on the trade negotiations that are happening and really no timeline for them. I think we're going to continue to see mortgage-backed securities being red hot and possibly continue to rise. The other factor, the other information we have, Freddie Mac does a weekly estimate for interest rates, and last week we ended under 4%, so 3.99 for a 30-year fix. That's with a 0.5% point. That's what the average is over the country. Obviously, everyone's quote is a little bit different. 15-year is a little under 4.5 with a 0.5% discount fee was the average last week. And then ARMs, typically don't talk too much about ARMs right now with fixed rates, so good. And you can see over the past year, we're definitely at that low, and that even extends into 2017 as well. The other hot thing that we're talking about, treasuries and them being very competitive right now, and continually people are buying that and moving money maybe from the stock market over to treasuries as more of a safer haven. We're seeing evidence of that, and we're running down to close to the 2% yield, which is extremely low. And as you can see, just in the past year, it's completely fallen from over 3 to 2%. So doesn't necessarily mean interest rates will drop, but traditionally the mortgage-backed securities markets and the 10-year treasury, those kind of go hand in hand, and we're seeing both of them. The mortgage-backed securities markets is actually lagged behind the 10-year treasury, which is telling us there's a possibility that maybe mortgage rates could get even better as we catch up, and as other countries are also finding value with our 10-year treasury right now. We may see some more buying. Today we saw that slowed down because we were on such a hot run, but we'll see if that continues, which I do think is going to happen as the summer starts heating up. I think mortgage interest rates are going to continue to heat up as well. So if you're looking to buy, it's a great opportunity compared to even a year ago. They're much lower. We're refinancing people that have bought even in the last year. They're dropping their interest rate considerably and saving money. And also people are moving to a 15-year term. If they've been in their house a little bit longer, their payment might even go up a little bit, but they're shaving many years off of their mortgage payment. So great opportunity to switch to a lower term. And then if you're looking to need to do some house improvements or take some cash out to do something else, you probably have some equity in there if you've been in the home, since the house prices have risen, and it's a good time to maybe look at refinancing as well. Please reach out. I appreciate your time, and talk to you soon. Thanks.